Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 25th, 2025, and we're diving into the latest earnings report from Sallie Mae, a leader in private student lending. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sallie Mae's performance this quarter is quite intriguing, especially given the current economic climate and recent federal student loan reforms.
Revenue and profitability overview. Let's start with the financial highlights. Sallie Mae reported a net income of $67 million for Q2 2025. John, how does this compare to previous quarters?
Well, the net income has seen a significant drop from $301 million in Q1 2025. This is largely due to a substantial increase in provisions for credit losses, which rose to $149 million from just $23 million in the previous quarter. Despite this, the net interest income remained stable at $377 million, indicating strong core operations.
And what about their earnings per share?
The GAAP diluted earnings per share came in at 32 cents, which is below the analyst forecast of 49 cents. This miss is primarily due to the increased provisions for credit losses.
Operational efficiencies and future outlook. Despite the earnings miss, Sallie Mae's net interest margin remains robust at 5.31%. How does this reflect on their operational efficiency?
The net interest margin is a key indicator of profitability for financial institutions, and maintaining it at 5.31% shows that Sallie Mae is effectively managing its interest income and expenses. Their total non-interest expenses were $167 million, which is a slight increase from the previous quarter, but still under control.
And what is the outlook for Sallie Mae moving forward?
CEO Jonathan Witter expressed optimism about the long-term outlook for private student lending, especially with the recent federal student loan reforms. The company is well-positioned to support more students and families, which should drive growth in their private education loan originations, currently at $22.6 billion.
EPS forecast and market reaction. John, let's discuss the EPS forecast. Analysts had predicted an EPS of 49 cents, but the actual EPS was 32 cents. How has the market reacted to this?
The market reaction has been somewhat negative due to the earnings miss. The forecast was based on a survey of 6 analysts, and falling short of these expectations often leads to a dip in investor confidence. However, it's important to note that the miss was primarily due to increased provisions for credit losses, which can be seen as a prudent measure in uncertain economic times.
Balance sheet and capital allocation. Turning to the balance sheet, Sallie Mae reported total assets of $29.6 billion. How does their capital allocation strategy look?
Sallie Mae's capital allocation remains strong, with $20.5 billion in deposits. They repurchased shares worth $70 million in Q2 2025, and there's still $302 million capacity remaining under their 2024 share repurchase program. Additionally, they declared a dividend of 13 cents per share, reflecting their commitment to returning capital to shareholders.
Key takeaways. In summary, Sallie Mae's Q2 2025 performance shows resilience in its core operations, despite missing EPS expectations. With a strong net interest margin and a positive outlook for private student lending, the company remains a key player in the sector. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Sallie Mae's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Sallie Mae's performance in the comments below.